Now, the Reserve Bank's first interest rate decision for 2022 has just been handed down. Ed Boyd is standing by outside the RBA HQ. Ed, rates on hold, but what is the bank governor saying about future increases to the cash rate?
Well, Kieran, last year the bank governor, Dr. Philip Lowe, was talking about 2024 and potentially late 2023 as when the cash rate may go up. Today, they've said it's on hold at 0.1%, and they've announced that they're going to stop providing economic support to the economy. They've been buying $4 billion in government bonds a week. They're going to stop that on the 10th of February, so that's a couple of weeks early. It was meant to finish at the end of this month. So the government is the Reserve Bank is seeing the economy in a pretty good place at the moment, and they feel like they don't need to provide any more economic support and bond buying to the economy. The last couple of lines of the governor's statement, it talks about the economic outlook and it talks about inflation. Currently, it is at 2.6%, the trimmed mean inflation, which is the highest level since 2014. The bank sees it staying sort of stable over this next year, but going down again in 2023 to about 2.25%. So the governor makes it very clear that they want to see wages growth pick up. Right now, wages growth in the September quarter last year was at 2.2%. They want to see wages pick up with the rate of unemployment, which is only at 4.2%. They want wages growth to lift. Before they see that happen, that's when they'll lift the cash rate. And the RBA just says they're going to remain patient at this moment in time and watch and wait to see how the economy is tracking. That's a noticeable change in language from last year when the governor was very clear about the end of 2023 as perhaps being when they lift the cash rate. So they've sort of left the door open to lifting the cash rate when wages increase. It remains to be seen how long that's going to take to happen, but hopefully for everyone out there with a job, it happens within the next 6 to 9 months, Kieran.
Now, how are the broader economic forecasts looking? Have they been updated?
They have been updated, Kieran. So we've got the Statement of Monetary Policy coming out on Friday, which is their quarterly economic forecast, and the governor has given us a little snippet of those today. The main one is the economic growth is predicted to be pretty strong this year, about 4.5% by the end of this year. The governor talks about unemployment reaching 4.2% in the month of December. And he's expecting hours worked to fall significantly in the month of January, with a lot of people stood down from work or not being able to work due to being in isolation or having the Omicron coronavirus. The governor also talked about inflation. It's currently at 2.6%, and he says that's going to start to trickle back down again before it picks up again in another couple of years' time. The other thing is the unemployment figure itself of 4.2%. RBA Governor Philip Lowe is expecting it to potentially have a 3 in front of it by the end of this year, and that's when the economy is going to start getting towards the full employment level where everyone that wants a job has a job. So unemployment with a 3 in front of it is pretty incredible. They're expecting that potentially either the end of this year or the start of next year. And that's really the critical data that the governor has spoken about today, that really low unemployment rate of around 3 and a something %, Kieran.